now we have to just invite Nilesh Shah and Nilesh Shah, and I would struggle to perhaps call out names here, because if I say Nilesh, well, I've got two Nilesh. If I say Mr. Shah, I've got two Shah. So I'll have to.
Thank God I'm not Nikunj.
There's only one Alistair here.
And there's only one Alistair here.
Okay, so Nilesh Shah, Kotak. So there is no confusion here. What do you think this verdict means for India first?
I think it's a verdict where for the first time we are saying that if there is a short-term pain for long-term gain, we are happy to take it. We had persistently high inflation. We followed a tight monetary policy. We followed reasonable pricing on agriculture products through a minimum support price. That resulted into lower inflation, and we had little bit of lower growth because of that tight monetary policy, but we have kind of rewarded that. We had high fiscal deficit. We have brought down that fiscal deficit. Again, it creates good macroeconomic foundation, but there is an adverse impact on growth. We have witnessed that. We had very low tax compliance. We introduced GST demonetization. It improved tax compliance, but it had side effect on growth. We withstood that. So here we have a verdict which says that if for long-term gain, if for overall gain, we have to pay a short-term price, we'll be more than happy to pay it.
Nilesh Shah from Envision Capital. I have to call out the entire designation to be able to distinguish with Nilesh. But Nilesh, what are we reading for the market right now? You saw the market move 2 days prior to the exit poll outcome. It moved on Thursday, it moved on Friday. Sunday, you had a decisive mandate handed out by the exit poll. The market moved again. And today, again, a similar pattern is happening. And also, the market is easing off from the top, much like it did day after the exit poll reaction on Tuesday. Would you say that at least in the near term, the best case is already priced in?
Well, it's always hard to really kind of figure these things out from a very short-term perspective, because what the market has done so far is only to basically retrace back to where it was sometime in April. So we were a month back, pretty much around the 11,800 levels. We've kind of we've inched up to 12,000 today, and we are still hovering around that 11,800, 11,900 mark. So I still believe that we've only retraced some of the losses that we've had in the start of the month. And if you recollect, in 2014, the markets did kind of go up intraday high to 7,500 on the Nifty and settled at around 72, 7,300. And then, of course, in the ensuing days, weeks and months, the markets again started to kind of scale new highs. So it's quite possible that we might kind of get back into a similar situation where the market says, okay, now the event is over. We now will have a stable government. There is continuity. There is no more political risk. And therefore the market consolidates around these kind of levels and then starts to kind of inch up higher in the coming days and coming weeks. And I think it's good if the market kind of spends some more time here, takes a breather. I think it only bodes well for the future. And then, of course, if the new government, depending upon composition of the cabinet, what ministries get allocated, and some of the other regulatory measures that they will do in the first budget, I think the market will basically kind of take all of that and hopefully move a lot higher than where it is even today.
Right. The other Nilesh then. Nilesh, what do you think is going to be next on the market's watch list? Is it going to be the composition of the cabinet? A lot of people are talking about what the reshuffle is going to look like, whether there's going to be a reshuffle, whether Arun Jaitley will be able to continue given his health condition at the helm at the finance ministry, or would it be then the government's next 100-day agenda which the market is going to keenly scan through?
I think market will be more worried or more bothered about the steps taken by the government. They will be keenly watching what steps government takes, one, to revive investments, which has been little bit on the back foot. One, there were lower capacity utilization. There were issues related to availability of credit and cost of credit. So how do we ensure that the investment piece starts falling in place? Second, market will also be looking forward to the priority of the government. Last term, they were more focused on building roads, providing gas connections, providing toilets facility to the villages and so on and so forth. Now, what will be the priority? Because till such time private investment picks up, the focus will be on government spending. The third focus will be on that we are kind of hitting a little bit of soft patch on the consumption side. Automobile sales have been down. Consumer staples are also talking about subdued growth. So what steps are taken by government to revive consumption side? So clearly the focus of market will be on the steps taken by the government to revive investments and consumption, which eventually will lead to earnings growth for the India Inc.
Nilesh, but on that point, what tools do you think the government would have or does have at its hands right now to revive the rural stress and thereby give that much needed impetus to the consumption slowdown?
Assuming that it is for me.
Yes, it is for you.
There is, short term, medium term and longer term.
Sure.
Easier on the, on the longer term side, clearly we have to shift our policy, which were first focused on tackling deficits because we were perennially short of, food grain production, which is required to feed our country. Now we have moved to surplus. So we have managed seeds, we have managed fertilizers, we have managed soil quality. Now that has resulted into surplus production. Now our policy should be how do we tackle this surplus production? There is a huge wastage during transportation for lack of cold storage facility. So that we need to tackle. There is a need to ensure that the intermediary's margin is protected. I believe a Himachali apple farmer gets about 25 paisa or 1 rupee. But the consumer in Mumbai ends up paying 25 or 30 rupee. So that wastages and that margin needs to be tackled through better transportation, through better cold storage facility. We also have to focus on value add. Jalgaon is today one of the largest place for growing banana. If I remember correctly, it's the 7th largest country in terms of banana production. But have we moved them into agro processing, like instead of banana, can we have banana puree which we can export or banana wafers which we can sell? So how do we tackle this situation on agro processing which creates value add for the farmers? So these are all the steps which will require longer term approaches. On the shorter term side, clearly the facility which government started, Enam, where buyers and sellers could come on a platform, that needs to be supported. We also have to look at how can we liberalize APMC guidelines in a manner where farmers end up getting a good price and the buyers also ends up getting a good deal. So there are short-term steps, medium-term steps and long-term steps which over a period of time will ensure that the surplus production which farmers are making is still giving them value add.
Alistair, you had a point here. You're in agreement with what Nilesh is saying.
Well, yes, and I actually find it quite depressing to hear him rightly saying about the importance of cold storage and getting farm products to the market, be it the domestic market or the overseas market. This is exactly one of the key points which Rob Subaraman, Sonal Varma and I were making in a study we wrote in 2006. 2006, 13 years ago, and the issue is still out there and just as important today as it was then. And this goes back to what I was saying about continuity. A complacent Modi is not what we want.
Yeah.
And addressing issues like that in the rural community, I agree with Nilesh, it's absolutely vital, it's long overdue, and I have to add to that, given the lack of progress over the last 13 years, that I'm not that optimistic about it being addressed now.
Okay, Nilesh Shah, Envision, markets are not at the highest point of the day. And do you think we could be in for a repeat of 2014 where there was a lot of pre-built up euphoria, markets got re-rated for a brief while and then we aligned with global cues. Because if I look at the 5-year return of what India has done versus what Dow has done, we pretty much have aligned with global markets. You think that's the story, that's the bottom line?
Well, it's not necessary that the next 5 years could be pretty much similar to the last 5 years. We have to keep in mind that essentially global markets and particularly the US markets have inched up significantly higher and probably done as well or even done better than some of the other markets across the world, because they have a whole pack of innovation-led companies which have done dramatically well, have acquired a global footprint, and have done amazingly well. And of course these are the likes of Amazon, Google, Facebook, etc., all of that. Obviously, of course, when you come back to India, we really don't have a higher proportion of those innovation-led companies, and clearly the mainstay of Indian companies have been the consumer and the financial pack, which have done extremely well. What is really not fired is essentially the rate sensitives or the engineering, the infrastructure pack, or sectors which are more representative of the broader economy, including of course ones connected to agriculture. And who knows, I mean, the next 5 years, if there is a significant focus on all of that, I think there's a strong potential for Indian markets to do even better, number one. Number two, I think the big focus area, which I think probably there should be the top priority for the new regime, should be essentially reducing the cost of capital. I mean, our cost of capital is still very, very high. So while we talk about increasing incomes and increasing productivity, but I think a big area of focus has to be how do you reduce the cost of capital. And if that were to happen, then again in the next 5 years, I see a strong possibility of Indian equity markets making a strong comeback on the global stage and becoming a strong outperformer versus rest of the world markets.
Nilesh, how would you change the orientation of your portfolio? And when I say Nilesh Kotak here, just to make it very clear that I'm addressing Nilesh Kotak here, do you think now it makes sense to perhaps get out of that defensive tilt completely?
Nikunj, it's a slightly tough question to answer because clearly market has seen polarized performance. Index has been driven to current highs because of the performance of few stocks, and they are today trading at above average valuation. There is a broad market of small and mid cap stocks where they are trading either around or below their historical valuation, and they don't necessarily represent the large cap indices where they are today. So clearly, as portfolio managers, will have to make a shift from overvalued expensive stocks to undervalued cheap stocks. At the same time, we'll have to ensure that we are taking into account the developing economic scenario. Today, the economy has little bit of issues related to availability of credit and transmission of credit. Because of the NBFC crisis, many of the small and medium enterprises are not able to get access to credit market. And this small and mid cap companies by and large, flourishes when there is more credit available in economy. They also suffer when there is less credit available. So you'll have to ensure that your portfolio is geared in such a manner that it fits with the developing economic scenario in terms of availability of credit and transmission of credit.
Alistair, to the point that you were making, should Indian investors, or for that matter global investors, be cognizant of the fact that most bull markets are now reaching their age of 10 years? I mean, typically, historically, when we have looked at cycles, bull cycles, they tend to peak out somewhere, in about a decade or so. Same goes for the US, same goes for the India. Or do you think it's not connected because in India it's a different, trigger set, so to speak. You've got the NDA now coming back to power. So it's a different mechanism that we're looking at.
I'm going to give an answer that I really would not want to give under normal circumstances, which is on the one hand, on the other hand, the classic economist's answer. Yes, this cycle is already old. There's no question about that whatsoever. But in contrast to most of his cycles historically, to go back to your point about the decade-long flow which we have tended to see in the past, at this stage in a cycle we've not usually had the sort of interest rates which we're seeing in three of the world's largest economies, the US, the EU and Japan. And as we've been saying on air on and off all week, we still have a lot of liquidity out there looking for returns. Now, in principle, I think India can benefit from that looking forward, not just through the next 12 months, but beyond that. But there are still question marks as to how much longer this cycle can actually continue. And India, although it's perhaps more insulated from external shocks of that sort, emerging market shocks perhaps in particular, India is not detached from the global economy, and it's certainly not detached from global market sentiment. So I do think we have just to sound a small note of caution to say, yes, India is looking quite good as a prospect right now, but we can't ignore the externalities completely.
And also the corporate debt that all of US is currently sitting on. I mean, let's not ignore that.
No, and I recall, I've had so many discussions this week, I'm beginning my age memory beginning to fade. I do recall that we raised the topic of CLOs in the US on corporate debt on Monday morning, and that is a non-negligible issue. It's not subprime dimensions yet, but what I'm looking at in the US today with the very successful Donald Trump deregulation agenda, let's be honest, he has done a lot to slash regulation in the US, which has helped animal spirits considerably there. Is it going too far? Is the pendulum of deregulation in the US swinging back too far in the opposite direction, particularly in financial markets? And is it encouraging, combined with very low interest rates from the Federal Reserve, is it encouraging investors to get into instruments which frankly run the risk of repeating what we saw in 2007-8, but this time around corporate debt?
Right. Nilesh Shah, from Envision, do we have to be mindful at all of what's going on across the globe? A, that the US bull market is already 10 years old, the corporate debt that most of America is sitting on, and of course, you know, what's going on between US and China, and then now the recent most US and Iran, and the repercussions it tends to have across global markets.
Oh yeah, absolutely. I mean, I think in the short term, clearly, of course, you know, a lot of the global events definitely have impact on the markets, and of course, Indian markets are surely a lot more correlated to global markets than what the Indian economy is correlated to the global economy. So clearly, I think any kind of upheavals which get created by either a global financial crisis or a global trade crisis or any of the other geopolitical undercurrents which keep coming on and off, I clearly think yes, all of these have the potential to basically impact the sentiment and the markets, and more importantly is in the short term it definitely affects liquidity of the flows. But having said that, I think this is where India's opportunity is, that clearly a lot of the big economic reforms which have been undertaken in the last 2-3 years could essentially start now paying dividends for the economy in the next couple of years. And then of course a lot of more steps which could be taken by the new government in maybe the next 1 or 2 quarters, and that will have some kind of bearing. So clearly again India has one more big opportunity, that while there could be challenges globally, but maybe this is going to be India's time to basically now start coming back on a high growth path and a high earnings path. And barring what could happen over maybe 1 or 2 months or 1 or 2 quarters in terms of liquidity, but India probably now is even more well positioned to outperform global markets and global equity markets than it was maybe say even a year back or 2 years back.
Okay, gentlemen, great to have you both on the show. Thank you so much, Nilesh and Nilesh, for taking time out and speaking with us. And Alistair, good to have you as always in the studio as well.